I think everyone has been reading about what's going on in the States, the backlashes that we see, asset managers, banks pulling up from the net zero alliances, which is, for us, I think, pretty upsetting news. What, how do you see that? I mean, what is GIIN's view on that? What are you doing against that? And I mean, we will talk a little bit more about politics also in the German environment later and regulation in Europe, but how much did Trump interfere with that?
Well, we've seen backlash against ESG dating back about 2 years in the United States. And there's a whole bunch of things that are driving it and a lot of confusion that's stemming from it. So I think it's really important to talk about what's happening and where we see the underlying trends in the market. One thing that's really important for impact investing as we think about its growth and opportunity in the market is that ESG is largely seen as separate from impact investing.
Mm-hmm.
There's a lot of concern about what's happening on ESG in the US. We see a lot of fragmentation at the local level between different states. But
Mm-hmm.
impact investing is framed and perceived very differently in the US and around the world because it has a focus on the rigorous delivery of outcomes,
Mm-hmm.
those that can be measured and communicated in areas that have a broad political resonance. Things like affordable housing, increasing access to financial
Yeah.
services for small businesses and entrepreneurs, rural development, agriculture, access to healthcare, and so many more. So one of the things that I think is really key to remember is that those topics, those themes, and those needs have broad political resonance around the world. More conservative and more liberal governments in many markets over the 15 years that the GIIN has been around have supported and embraced impact investing. So we think at this moment, where global research points out that about 87% of retail investors around the world want their money to be invested to
Mm-hmm.
address climate change,
Mm-hmm.
and 80% want it to be invested to address inequality. That we remember that we're building a field that serves a lot of demand that crosses the political spectrum globally.
Some people even go as far as to say the notion of ESG has been weaponized and also being part of that backlash. And a lot of it is obviously coming from Republican parties and Republican forces. So, how much do you think is really politics playing into that backlash, which we don't see that much here in Europe, by the way? So, sustainability, and we still can talk about what is sustainable investing, what is ESG investing, what is it not, what is impact investing. Even here, we're still debating that. But what do you think is the political influence in the States pre-Trump and now during Trump?
Well, we see polarization as a really unfortunate factor in the way
Yeah.
that sustainable investing is perceived. Because fundamentally, sustainable investing should appeal to everybody. Essentially, it's around making sure investments are sustainable from a social and environmental perspective, that they meet the needs of workers, of communities, and the environment. And a lot of sustainable investing, of course, is really focused on managing risk, and of course seeking opportunities to have positive impact on these issues.
Mm-hmm.
So polarization is definitely a factor when it comes to these labels. And that's why I think it's so important to come back to the fundamentals of what are the actual benefits that investors are trying to deliver at the community level, at the regional level, at the national level, and of course at the global level in terms of like supporting a healthy environment that supports all life. I think it's really critical in this moment of a lot of polarization and a lot of confusion that investors are crystal
Mm-hmm.
clear on what they're trying to accomplish and then what their intentions are in terms of helping to get people more shelter, helping to create economic opportunity and fairness,
Mm-hmm.
helping to elevate workers to a more
Mm-hmm.
sustainable life with dignity,
Mm-hmm.
and even creating like ownership opportunities for workers so
Yeah.
they can take a stake in the upside of a business's success.
Can you talk a little bit about that? Because I think it's a very interesting concept. How can you have ownership in companies
Yeah.
without, for instance, having to invest directly, but also, I guess, through trusts or retirement plans, I would say.
Yeah, that's right. So one of the things that's always so challenging is that for people who are lower middle income, they earn a wage, but it's hard to actually build wealth. And of course, we know that building wealth is what helps create assets that you can pass on to future generations. They help protect you from various shocks that can happen in medical emergencies. Someone
Yeah.
has an injury. There's something that comes up in life that requires more assets than what they can afford in the day to day. And that's where there's been so much interest and excitement around what people call like the ownership economy or shared ownership models, ways in which workers actually have a piece of the equity in a business. So if the business thrives it means that they actually get some of the upside. If it's sold to another investor, they actually get some of the proceeds. That can be a windfall. In some cases, it may seem modest when you're thinking about global capital markets, but at an individual household level, it can be life-changing.
Yes, and especially in countries where retirement financing is mainly done through private investments, which is a mixture here in Germany, for instance, but it's much more the case in Switzerland, I think, and as far as I'm aware, also in the States. So, yeah, they should also have an interest in long-term ESG thinking. And let me ask you a question here. Do you think that, especially asset managers, but also companies, not only asset managers, even if ESG, the notion might be weaponized at the moment, are still looking at it from a risk return, for especially risk perspective? Because that's what I hear very often people say, that that's happening at the moment. Do you see that too?
Well, I think it's when it comes to ESG, we know of a lot of investors who are looking at it through a risk management lens. How do we actually think about these issues to reduce risk of financial kind of issues for the market? Of course, it's very different from impact investors who are not with risk orientation, but are seeking opportunities. The ways to invest in solutions to problems, the ways you can deliver positive outcomes. Now, of course, you can't paint any investor by one single brush, and we see lots of investors focusing on managing down negative impacts and trying to drive up positive impacts. And that's why I think it's so important for investors to be really clear about what they're trying to accomplish and what benefits they expect to deliver to society and to the planet.
Let me asking about a little bit the definitions and what is part of impact investing and what might not be part of impact investing. We here in Germany, we look at impact investing more from a private markets lens. So we talk about venture capital, private equity, private debt, infra, real assets. We obviously see that GIIN has started to expand more into the liquid space. Could you expand a little bit on that? Why and what's the motivation behind? And are there frictions sometimes or not?
Well, one of the things that we thought was so important is that we're really clear on what impact investing is. And we define it as investments that are made with the intention of delivering a positive social or environmental impact alongside a financial return. Now, much of the early energy and impact investing was focused on private markets. But when you think about the issues we're trying to solve, whether it's the affordability of housing globally, or trying to drive a transition to a more sustainable energy infrastructure around the world, you can't solve those problems with just private markets. We actually have to engage with the full kind of capital markets in ways that we can actually drive the solutions we need. And so for that reason, we thought it was really important to articulate what impact investing would look like in listed equities.
Okay.
And a lot of people were asking us for this as well because they were worried about impact washing and mislabeling and people overselling and overpromising. So having the GIIN as an industry body kind of create guidance on this that were rooted in integrity and in real honoring the spirit of what impact investing is trying to achieve is what we set out to do. We had a working group of over 100 investors who worked with us over a couple of years to then define guidelines of how impact investing could be conducted in listed equities. And those have actually helped inform regulatory guidance that we've seen in markets like the UK and Japan. And we think it's really important so we can actually create a clear lane for what impact investing looks like in this broader ecosystem of sustainable investing.
Talking about transition financing, how is your view on transition financing? Because for us, it's an integral, it belongs to impact investing now. When I learned about impact investing 14, 15 years ago, I worked a lot with the GIIN definition back then, which probably is known to everyone in the audience. But transition financing was not an element of that. And these days, I cannot separate those two approaches. I do know, however, that other organizations have a different view, and they say impact investing cannot start in brown and turn green. It has to start in green, stay green, maybe get even greener. Do you have a stance on that, or are you thinking of it, debating it?
We absolutely have been thinking about this. And of course, we speak to a global audience. I know we're here in Frankfurt, but we'll see, hopefully people will be connecting with us all over the world. And so the way we think about impact investing is you're driving a positive change in the world. and that you're working as an investor to influence the direction of a project or a company in a way that means it will be delivering better outcomes on social dimensions and on environmental dimensions as well. And that's what the critical kind of change. You're trying to contribute to positive change in the world. And so by definition, that could mean you're focused on the activity and not the underlying asset, meaning that you're actually trying to drive positive change, which means transitions and change, depending on how they're defined in different parts of the world, could absolutely fit in scope with what we define as impact investments.
Exactly. Thanks for saying that, because that is our stance as well. And it's going to be interesting here in Germany. We just had the national election a few days ago, and looking at the political party platforms, they don't mention impact investing yet, but we are not done with our work yet. We, BIII. But if you look at, it's the Conservatives and the Social Democrats, if you look at their manifestos, you do see notions, even if they are not labeled impact investing, being very present. We need more capital to succeed. We need more private capital to solve the social and environmental problems. It cannot only be solved with public money. And transformation comes up over and over and over again. And I really think it's essential that we need to get the industry net zero. Yes, I think that's absolutely crucial for addressing those problems.
Can I build on that? Because I think it's such an important point of when governments set out an agenda of trying to improve the livelihoods of their citizens and trying to improve their role in the world, that they see impact investing as a potential opportunity to help complement their resources with driving positive impacts. So whether it's trying to create more housing for their people, trying to help support partners around the world and having more sustainable economies, so that could be in places like Africa and Asia and elsewhere. But impact investing is a great resource to tap into and a great community of partners for any government.
Absolutely.
We've seen this in Japan, where they've set a national agenda focused on things like supporting an aging population, helping to develop rural economies that have had some state of decline as there's been an drive towards urbanization, and they want to drive more innovation in the market. And so they're actually engaging with impact investing to help support these national priorities. And I'd love to see that in Germany, in the US, and everywhere else around the world.
Yeah. I'm sure you've heard about the notion of EU taxonomy, CSRD, SFDR, CSDDD. It's a huge thing in Germany, in Europe at the moment. This so-called omnibus directive, the suggestions just came out a few days ago at the end of February. We were all pretty much highly confused. We were all trying to get our head around it. I think some of the movement was okay and good, like cleaning up a little bit the reporting duties. Some elements might have been gone too far, and we also think about what does it mean for our credibility. Is this perceived in the States? Do you have regulation challenges like we have? What's too much? What's maybe too much of a withdrawal then? Why hitting the button, the stop or pause button for 2 to 3 years?
Well, in general, our members are paying very close attention to regulation, and so are we. I think we can see in any market, the government writes the rules, and they kind of create the playing field for people to compete in, and it's a very important role. And those regulations can hinder the development of market, or they can accelerate it. We have definitely seen a lot of leadership from the EU on trying to drive more sustainability in the economy. And I think the EU has stood out relative to other parts of the world. And a lot of people are looking to the EU's leadership to figure out what they should be doing in different markets. But of course, with any regulation, there's also a lot of complexity that can come with it. And I think this effort to streamline regulation could be very helpful. It all depends on what the final product is. But we do hear from many members and investors around the world, based on our research, that one of the biggest challenges, cited by over 80% of impact investors around the world, is the kind of the patchwork of regulation. Different things in different jurisdictions. And an asset manager here in Germany may be selling products all over the world, in Asia and the US, and similarly an American firm may be doing a lot of business in Europe as well as in Asia. And so these geographic differences in regulation can just create a lot more complexity for any individual firm
Yeah.
to manage. So ideally, we would have more interoperability of regulation, but I do think it's going to be a while till we get there.
And to be able to compare properly,
Yeah.
not talk about apples and pears.
Right.
So let's see whether we manage to do that and achieve that here in Europe, and then we'll take a look across the pond. The last question I have for you is, you're coming to Berlin.
Yes.
Yay! Beginning of October. Great
Yes.
news. The GIIN conference, the first time in Germany. We were super excited to hear that. What was the trigger, the motivation to come to Germany in October?
Yeah, we're incredibly thrilled to have our event in Germany, and Berlin is such a special city, and I think is going to be really an exciting venue for us to convene over 1,500 impact investors from 70 countries. The forum plays a very important role, and that it brings together an exchange of ideas. And I think this is an important moment in the world where we get the best impact investors together to think about what impact investors can accomplish for communities all over the world in this moment. I think Germany is a great place to have this event. We're incredibly excited. Of course, there's a lot of interest in impact investing, as evidenced by the community in BIII, but we also see a lot of potential. Germany is such a huge financial market, and there's so many great institutions here that we could even be more active in impact investing. So we hope they participate in the forum. They have a chance to learn, to make connections, to build partnerships, and we hope that overall this event will be kind of a kickoff to a next great phase for the impact investing market.
Super. Let's make it the best GIIN event ever.
I'd love that. We're completely aligned.
Well, thank you so much, Amit, for taking the time, for answering our questions, for bringing in the international context, which helps. I think sometimes it's important. Of course, the German market matters to us, the European market matters to us, but also to hear a little bit from across the pond. What's your views? Thank you so much, and see you in Berlin at the very, very latest. You're always welcome here with us. Thanks for joining us here.
Well, thank you for hosting me, and thank you for your leadership. We really appreciate the opportunity to work with you.